How's it going, everyone? Welcome back to another video. In this video, we're going to talk about the quickest way to lose money in the stock market. We're going to be discussing INM. I'm sure as a lot of you guys saw today, this ticker ran from $2.70 to $5.50. This is a biotech pharmaceutical company. They released some PR earlier today, and I'm going to be showing you guys why all of the people who are swinging this into tomorrow, who are bagging this ticker, are more than likely going to very much regret that decision. Let's get right into it. Let's look at this ticker's daily. Now, as a biotechs don't usually have the best history of holding up. And as you guys can see, every time INM has seen a run, this has come tragically falling down, and losing all of its momentum the following days after each and every single run. We can take a look at January 21st. We can take a look at more recently, June 2nd, where we went all the way to $8 and lost, more than 50% traction just the following day. Now, that's overall mainly just biotech tickers in general. Let's go through why INM even ran today. As you guys can see, INM had preclinical data come out, and it supported the potential of INM 901 as a therapeutic candidate in Alzheimer's disease. Now, if you guys have traded biotech tickers before, if you guys have traded pharmaceuticals before, you should know that preclinical data is the data that comes out before phase 1. So we are still very, very early on into this INM 901 drug, but this could be an entire financial shift in INM's stock history, stock's price, if this drug is actually able to continue through phase 1 through phase 2, which if you trade biotech stocks, that phase 2 is the most important phase. And usually biotech stocks react to phase 2 news as the best, but we are still months and even years away from phase 1, phase 2, and phase 3 completion. So this is still very early on news. It's pretty insignificant. Now, I wouldn't say that this price reaction isn't justified. I do believe it is for a low-float, biotech company, but I do believe that this stock is going to fade away into tomorrow. I think that this stock is not going to hold up, and I will dig into why. We have decent cash to debt ratio, 5 million to 800K. That's not too bad. We have a negative operating cash flow. It's a huge red flag. We also have low institutional and insider buying. Now, if we take a look at, there's actually no analyst price ratings. Let me see if there's anything else I wanted to discuss on this page. No, I believe that's it. Dilution, heavy dilution. Biotech companies also are known to dilute. These phase 1, phase 2 preclinical trials are extremely expensive to support and to maintain. And as you guys can see, INM currently has 4 months of cash left based on quarterly cash burn of negative 2 million and estimated current cash of $2.8 million. That's not going to last. They need to dilute. They need to have public offerings if they actually want to sustain and not dig themselves into as deep of not dig themselves into holes of debt. That's what I meant to say. 4.5% short interest. It's whatever. There's not going to be any short squeeze on this ticker. And as I said, I think this is going to come all the way back down to this 330 level. I don't see this holding up whatsoever. You can see the way it lost all of its momentum towards the end of the day. It actually did recover above $4 into market close, but I think the most we'll see on this ticker is 450 and then a flush all the way back down to low 3s, high 2s tomorrow. So I've seen a lot of people on Twitter, StockTwist posts say, hey, we're holding this ticker, we're swinging this ticker. I think the max this can push is 4.5. I would never touch a stock with a 10-foot pole. Why would I? All of the due diligence goes against this ticker, the financials, the news that it's currently running off of. I don't see any green flags here. So that is my price prediction and analysis on INM. I hope that helps. I will see you guys in the next video. Peace.